The Fed is putting out the inflation fire with a bucket of water. Last week, it has raised rates for the second time this year by the most in 28 years by 0.75% and intends to continue doing so. Of course, it is not enough, but the process of hiking has started and it will have an immense impact on our lives. Hi, my name is Stano Žák, and in this video, I'm going to show you what impact the Fed's decision to raise rates will have on our money. According to global investor and author Ray Dalio, by the way, the dollar billionaire, the inflation genie is out of the bottle, and this is just the beginning. And we should keep in mind, the lower the interest rate, the easier it is for valuation of stocks to rise. The higher the interest rate, the harder it is for stock to rise. The US Federal Reserve last week raised interest rates. Why do I mention the Fed rising interest rates? Because it will affect all of us and the value of our money investments. What is happening on the financial markets in the US is spilling over to us in Europe like a tsunami, thanks to the globalized world. It will be felt even by the ordinary investor who is saving in mutual funds for his retirement. This interest rate increase by the Fed is small, but it fundamentally changes the playing field. Someone told me lately I was prophesying a crisis. I'm not prophesying crisis because it's already here. We are watching it live daily. We'll see by the end of the year what happens, but it won't be pleasant. Investment aces like commodity guru Jim Rogers or Ray Dalio say we are going to have the biggest and longest bear market of our lifetime. And these gentlemen know something about the financial market because they were 55 years in it. Just 2 days before the Fed raised rates, stocks were already officially in a bear market, with the S&P 500 stocks index down more than 20% since the beginning of the year, and the Nasdaq index of technology companies down nearly 30%. There were a number of overpriced companies that had been growing for years thanks to a investment by pumped up investors, but in real terms, these companies were never in profit. And the fairy tale of endless growth is now officially over. The world is now indebted at unprecedented levels, and the key factor in the coming collapse is a rising interest rate. Mortgage rates in the US are now around 6.15%, yet they started this year just about 3%. And in the fourth quarter of last year, the US even had a mortgage rates as high as 2.75%. This tells you that if an American qualified for a $1 million mortgage at the end of the last year, he now qualifies for only $500,000 mortgage. If you own property in the US and are selling, this means that the pool of potential buyers is much smaller than it was 6 months ago, simply because interest rates have essentially doubled. It also means that the property values can drop dramatically. On the US real estate portal Zillow, you can see discounts on long unsold properties, mainly luxury ones, because nobody wants to buy overpriced properties in the times of general crisis and uncertainty. Cryptocurrencies have also experienced a bloodbath, with the entire market plunging nearly 30% in a few days and around 53% since the beginning of the year. Not only the stablecoin currency Luna crashed, but also the crypto lending provider Celsius. and withdrawals on the largest crypto exchange, Binance, were also temporarily suspended. There may also be regulation of the cryptocurrency market and the miners, which would not be good for the prices of cryptocurrencies, of which there are nearly 20,000 plus 527 exchanges. Interest rates have been on a downtrend for more than 40 years since the Fed chief Paul Volcker raised the key rate to the aforementioned and now incredible 20% in the early 1980s. Basically, we just went through a 40-year bull market in bonds where interest rates did nothing but go down for 40 years. But that 40-year trend is now broken and rates are heading up. Higher interest rates will make it very difficult for the states to pay their debts. It just so happens that the system is more indebted than ever before, no matter what ratio or basis you look at. These higher interest rates inflate the debt bubble until it eventually bursts. Let us not expect the US Fed to come in and save the day, as it did in the last financial crisis in 2008 and 2009, which was based on the outstanding mortgages of over-indebted Americans being traded as a prime financial product. Just watch the movie about it, which is called Big Short. Great to see. The Fed saved the economy that time, the banks and the companies back then when it started printing money like crazy and never stopped. The bottom line is that the world financial system and therefore the real economies have been on a life support since 2008. People should understand that when the Fed says it will raise their interest rates and that it will shrink its balance sheet, it means it is pulling the plug from the wall. They are unplugging the patient from the system, from life support, from the artificial nutrition called low interest rates. It is already clear to many people that the system cannot live without the dope in the form of cheap money, freshly printed in the form of government bonds bought by Fed. The Ponzi scheme cannot continue without the inflow of new capital into the system. The Fed had to make a logical choice. Either there would be a lot of inflation and sudden distrust of the dollar at home and abroad, or they would let the stock market crash through increased interest rates, sacrificing the savings of the population, which they invest in the stock market and fixed income bonds. You cannot have it both ways. A rising stock market and a rising interest rates, plus low inflation. What the central bankers are doing now is that they are disconnecting the markets from its propelling force, low interest rates. It's game over. Game over. And I don't think we've seen peak inflation yet. And do you see a change in the nature of money? According to recent Star Investment World, Zoltan Pozar, a former Fed insider and now an analyst at the Credit Suisse in New York, this crisis is unlike anything we have seen since President Nixon stripped the US dollar of gold in 1971, the end of an era of commodity-based money. From the Bretton Woods era after the end of the World War II, backed by gold bullion, to Bretton Woods II, backed by internal money, government bonds with unhedged confiscation risk, to Bretton Woods III, backed by external money, either gold bullion and other commodities. Zoltan Pozar believes that the global monetary system will never be the same after the crisis. we are witnessing the birth of Bretton Woods III, a new world and monetary order based on commodity currencies in the East, which is likely to weaken the euro-dollar system and contribute to inflationary forces in the West. The commodities crisis is spreading. Commodities play a role here today as collateral, and collateral is money. And this crisis is about the growing allure of so-called outside money versus inside money. Bretton Woods II was built as a monetary system on inside money, government bonds, or trust in the US economy and the dollar, and its foundations collapsed when the G7 countries recently seized Russian foreign exchange reserves. Russia and China, along with India, Brazil, and other countries, are trying to either limit the use of the dollar in their trade with each other or use commodity-backed money like oil, gas, gold, and wheat, where there is no risk of default because you have collateral or security in the form of commodity. There may be behind-the-scenes negotiations to reset the system for a new financial arrangement. China and Russia may say, here we have a third-party audited gold. How much gold we have? Show us your reserves. The US hasn't audited the Fed's gold reserves since 1956. Many experts think that US doesn't have as much gold as it declares, and on the other hand, that China has been secretly buying and officially owning more gold all along as it claims. And as the old rule goes, whoever has the gold makes the rules of the game. What we have here is a system change in the making, and those who don't believe it should sleep for a few years and then wake up in a new world. It won't be better or worse. It will be different with a new balance of power. Speaking of the precious metals, gold and silver are history proven and the only money in the world that cannot fail. You can learn about why and how you should own them in the videos on my YouTube channel, Stano Žák All Stars. In the information page, there is a special link with the registration page where you can start buying gold, silver, platinum, and palladium with the wholesale price through awarded German precious metal dealer Augusta Edelmetalle AG, active in more than 120 countries and serving more than 200,000 active customers worldwide. Don't forget to like this video if you found it valuable and subscribe to the videos so you don't miss anything important, as I am preparing lots of interesting stuff. Hold your heads, it's going to blow a lot.